What's up, guys? This is Carter Thomas with Coin Mastery TV. Happy Tuesday. If you're new here, hit the subscribe button. And if you're returning, hit the thumbs up button. Let's get this started. Let's rock it out, dominate, and do our thing. Today, we're talking a little bit about Bitcoin's interim phase, Ethereum's kind of wild action-ish day, and then a few interesting pieces of news that I think have some good implications on the ecosystem. But I think the real big picture thing here, especially this whole week, is building into next. Next week, if you don't know, it's a big event called Consensus. It's in New York. Consensus is like an incubator, and they throw this huge, what is turned into what's called Blockchain Week in New York. And it's a massive event. It's really where everybody goes. And the reason why it's important to you is because that's when a lot of things get announced. It can be a very big inflection point in the market. That's what everyone's hoping, at least. And so that's kind of why I think that there's a lot of, not a ton of action this week. I'm sure that could change, but that's kind of what we're building towards. And then finally, just a really cool resources. One resource I think everyone should go check out. So welcome back. I saw U2 for the first time last night. Worth seeing if you've never seen them. If at the very least, go watch the Slain Castle DVD. You can get on YouTube. Man, politics aside, whatever you think about them politically, especially Bono, those guys could rock. It's impressive. So let's talk about Bitcoin. Speaking of things that rock, Bitcoin, as we saw yesterday, is really testing this trend line. So if you're listening to this right now, it is the trend line that's creating this kind of triangle. And at this point, I would just encourage you to watch the video for 5 seconds and see what I'm talking about. But you can see how it's holding. Now I'm on the 4-hour. So yesterday it held and it had this huge wick down. I shouldn't say yesterday, I guess early this morning Pacific time. Huge wick down, but it came back. But now we are having a continuation candle, if you will. Technically it's maybe not a continuation candle, but it's continuing the trend, and we're breaking through that trend line into this, what is considered some would call it a support buy zone. I just call it an area of, it's going to be chop, right? And hopefully it bounces off of this. So we've got a few things working in our favor to push it off. And if you go into the 1 hour, you can see that there is some support, there is some bounce, but then you're getting some pullback because now it's below the line. So you're getting resistance off of the line that was previously acting as support. It's just never ending with this stuff. Now, one thing I think that's really important that maybe seemingly obvious to some of you, and we've talked about this, but I think it's important to call this out, especially as you are trying to make your decision on when to potentially buy back in or sell or hold or whatever. The more you use indicators that are longer periods of time, the more confirmation you're going to get. The more conclusions that you draw from those indicators, the more you can hold that to be pretty true. Meaning, if I see a reversal on a 4-hour chart versus a reversal on a 15-minute chart, the 4-hour chart is much, much more legit, right? That's going to hold and it's going to last a lot longer. The second thing too is if you are using any of these indicators, like Fibonacci retracements, or if you use Bollinger Bands or MACD or RSI or any of this stuff, the farther out you go, the bigger the time frame, the more effective those are as well. Because that's when technical analysis actually does work pretty much across all markets. You can go to bonds, equities, Forex, whatever, and it'll work. But you got to go on the 4-hour or the daily. And many people don't have the patience. And then honestly, in crypto, it's often not very practical, especially this time around. But just keep that in mind. And as a trader, or as an aspiring trader, I would say, that is something that I have had. That's been one of the hardest things to do, is to temper the desire to move into small time frames and forget that all the analysis and the indicators get less effective on those smaller time frames for obvious reasons. People can move the market more easily in any market. And so one thing I'm doing is I'm getting better at starting at, let's say, the 1 hour, using the 1 hour, the 2 hour, the 4 hour, sometimes the 6, 12, 24 hour charts before I make any sort of decisions. It's boring. You trade way less. Not that I've ever really traded much to begin with, but when you do trade, your success rate is much, much higher for the most part. So I thought that it's just like an important piece of the puzzle that, if you're getting into this, if you're new, you might not know that, and it's also easy to forget. So try to stay above the hour. Once you get below the hour, you don't want to be making trading decisions, buying and selling decisions. You want to maybe investigate with that sort of knowledge, but yeah. So as it stands, looking at the 4 hour, there is no real conclusion I would see in this, especially if we stay below this line. I'm going to wait for a few more. I think that this zone is interesting for a potential bounce, but if the deeper we get into this zone, the bottom may act as support, as we've already seen a bunch of times. So that's going to be some support down there. That may be a buy area, but you're really, the top and the bottom of this box are really the only interesting areas, in my opinion. So that's what I'm looking at. Now, switching over to Ethereum, I started on the 1 hour on this one because, there's not a whole lot to be said with Ethereum over the longer term right now, because all the action's pretty much pending on this news, which it turns out there actually is a meeting with it's like a hearing, which we'll talk about in a second. But I want to point out something really interesting. So yesterday we drew this support and resistance line. You notice I don't use a lot of stuff, and I actually try to use less and less stuff than the more I get into it. And you can see this is the support and resistance line. But you can also see that yesterday, and this is when I will, as illustrative and investigative work, you can zoom in. You can see on, 2:30, I guess that's like 2:30 a.m. Pacific time. Had that low. It started to have this bounce back up. Then it had a big drop again, and then it had the big bounce back up. And this is all based on, there's fear about this, the uncertainty. There's relief for the market. Then it turns out, there's actually no meeting. So there's another relief from the market. And it just shows how much, not only how emotional, but how short-term a lot of people are thinking right now. And that goes into what we were mentioning yesterday. There's so much money just trying to find ROI somewhere, right? In the traditional markets, they find it in volatility. So when you look at the macro picture on something like the stock market, at least in the United States, but this is true pretty much everywhere in the developed world, when the returns of those traditional asset classes, right, equities, for example, or ETFs, index funds, when those start to get more boring, when it starts to go down to 4 or 5%, asset managers need to make up for that. So they develop things like the volatility index with a 3x inverse on top of it to make it very high volatility, in order so they can scalp and get yield from that, right? They call it yield. In our case, we call it ROI. What that means for you got to pay attention to this sort of thing, because if this is happening on one of the biggest assets in the class, it's going to trickle down into all the other assets. So if you are trading, or if you are even looking at some of these coins and these prices on a shorter time frame, it's going to get choppier and choppier. And that makes it really hard. And when you get on the margin side, you can get stopped out very quickly by these big wicks. So I think that keep that on, just keep it on your radar, I guess is the way to say it, because I do not see this happening anytime soon until we are clearly out of the woods in a screaming bull run again, and everybody's just throwing money in the air, getting vanity license plates, the whole deal. But I do think that this is a big deal. I mean, this is a like 50, $60 billion drop on market cap across the board in 2 days because of people worrying about something that didn't even happen. That's a data point. That's something that I would pay attention to. Switching over to CoinMarketCap, there's not a whole lot to say over here. I think we've kind of talked about this enough. Bitcoin got listed on Binance. There's a huge arbitrage between Poloniex and Binance. But I think it goes along the same lines, right? Who knows? Bitcoin, whatever. Who cares? The real story is the fact that there is such a huge pump, right? When there's nothing else to absorb people's desire for returns, when they see an opportunity, it gets pumped like crazy, right? Especially a kind of an older asset, something that's been around for longer, and there's potentially a lot of bag holders. That is what I'm talking about. You're going to see more and more of this stuff where it gets more and more tempting to chase these one-time things because it won't be asset class wide. It'll just be one-offs. And you'll start to see that, and just be aware of that. I would personally not recommend getting caught up in that. Same thing with some of these ICOs you're going to see pop up. Holo. It's another good example. You know, when the market starts to reward something, there are people out there that are saying, hey, let's not try to create a pump. Let's just throw gasoline on an existing pump because we know people are going to flock to this like a moth to flames. That's how it's going to keep going. You're going to see less and less of these pumps. They're going to get bigger and bigger, and more people are going to flock to them, and then they're going to die just as quickly at some point. And look, I'm not saying anything negative about Holo coin. I mean, I don't know anything about it. Just saying that that's what the market is doing, and it's good to be aware of that sort of thing. So stick to your plan, stick to your guns, all that sort of thing as we move forward in this exciting time. But I do think that, you know, my personal opinion, or my personal strategy, I should say, not even my opinion, is I'm just waiting and I'm just sitting back and letting this do its thing. There's too much uncertainty. There's too much bouncing around for me to really make a very high confidence move on any of this stuff. Because none of this is professional advice, as you guys know, which I need to say every single day. Thanks so much for that regulation. Let's talk about a few pieces of news real quick and why they're important. Okay, so the first one, the New York Stock Exchange owner, which is the ICE, which it's the Intercontinental or whatever. It's a huge exchange. Like, they own massive amounts of exchanges for commodities and forex equities and all, and they own the New York Stock Exchange. And this is really interesting. I think that this is the key. There's a lot of people that are coming out and they're saying, oh, we want to have an exchange, or we want to list this, or we want to trade crypto, blah, blah, blah. But the only thing that matters, this is the only thing that matters, is if they're getting more people to actually buy Bitcoin, right? If they're buying Bitcoin futures, that doesn't help us. If they're buying Bitcoin ETFs, that kind of helps us if the ETF is actually buying the Bitcoin, but they usually don't. They usually just peg it to Bitcoin, and then they create a security on top of that, like a derivative. But this, they're saying that they actually will be able to buy and own Bitcoin. So they're going to create a swap, which is a security product. People can buy the swap, which will allow for the custodial services, and then they will get ownership of Bitcoin in some capacity. I don't know the exact mechanics, but that is a very, very big deal. So if that ends up being the case, where people can get real Bitcoin, they get the private key, hopefully the private keys or access to the private keys, which is kind of like what you get with an exchange like Coinbase or Gemini. You don't necessarily get the private keys, but you know you can export it to private keys, right? You have the opportunity to. That's a big deal because that decreases the supply, and that is what we want. If this ends up being they create a product, they call it Bitcoin New York Stock Exchange ETF fund or whatever they call it, and they say, look, for for every it's 100 to 1 paper to physical asset. That's what they do with gold, right? With GLD. And they can make the ETF as big as they want, but it only means they have to peg it to the price of Bitcoin. They don't necessarily need to buy it. That's how futures work as well. That does not help the price of Bitcoin whatsoever. We need it to be buying the physical stuff. So keep an eye on that whenever you see this sort of news, right? Whenever you see, oh, trading desks are open. Oh, they're building an exchange. Oh, they're building new products, blah, 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 blah. Look in the fine print. Are they actually buying the asset? Does it mean you get the ownership, or is it just pegged to it? Because if it's just pegged, guess who's getting rich? The people who own the products. They got fat management fees on those things. Okay. CEO of Binance, great guy, CZ. He released a great blog post yesterday, which I'll link to all this stuff. You can go check it out, where he basically said ICOs are a really good thing. And while they obviously have their problems, but the fact the benefits vastly outweigh the cons. And he really talks about how it can create great speed. It can create lots of flexibility. It can create just access that didn't happen before. And he goes through it all. It's really, really great. And it's really great to see him taking a proactive stance on this stuff. I personally think that this is kind of, it's interesting to see this common theme among many of these CEOs where they almost take on a, not David and Goliath, but there's a word for this, not a tragic hero, but they take on some sort of personality to kind of fight somebody or something, some institution that's causing them a lot of issues at the time. And so in this case, Sequoia Capital, if you don't know, it's one of the biggest, most successful companies, venture capital firms in Silicon Valley down the road here. They are suing Binance they tried to buy them out, and Binance took off, and they ended up killing the deal, blah, blah, blah. That's a huge venture capital fund that operates in a very particular way. Binance is very much at odds with them right now. And this is not only is it good for the community, I think that this rallies the troops, so to speak, but it also shows you that there's this ability to split the community, to make it an us versus them thing. I actually don't necessarily think that's a bad thing in many ways. I do think that the more you can do that, the more you can create new alliances. I don't think venture capital necessarily has a good reputation with a lot of regulators or people in DC. And so if crypto is like the anti-VC, that could actually be a very strategic move if he's trying to do that. So keep that in mind, right? It's not just about, hey, is Binance listing ICOs now? It's not just about the micro stuff. There's a bigger game at play here. And that is how this stuff is going to work out, right? And you play that out, and then you can use things like this in conversations when you're having conversations with the right people, right? If you're talking to someone about who might not like venture capital, well, then now you can read an article like this. You now have some mental ammunition to talk about how this is the anti-VC. You see what I'm saying? So that's why this sort of stuff is really helpful to just keep reading and keep analyzing in a macro way. The Fed came out and they put out a brief, report, PR, research paper, the Federal Reserve, I should say. And they basically said that the futures market released in December of 2017 is what caused the price to drop from at 19,000 or 20,000 or whatever. And it was the futures market that did it. What's also interesting is that they said the reason why we think this happened is because this is what futures do. And futures work perfectly in order to tame the price of a market. They went on to explain XYZ, like how that works and all that. And I think it's kind of reassuring in a weird way because it shows us that the Fed at least feels like there's some level of control they can have over the price, which I'm not sure I agree with, but hey, whatever, perception is reality. So they said, hey, look, futures came in, they did their thing. And I'm sure on their level, they're like, okay, well, at least we know that that works. So what else can we try to box in on this thing that'll work? Meanwhile, crypto is a beast of its own, and theoretically, it could just blast through all of that. Well, you never know. We'll see what happens. But I think it is good in that sense that they're at least accepting that it is a market. It's a market like other markets, and that is a first step in moving into what would eventually be a legitimizing of the space and moving it into potentially even the balance sheet or the block or a ledger for the entire government. Legitimacy helps with regulation, all that sort of stuff. That being said, on the flip side, it's a bit of a cautionary tale in the sense that if they're saying, hey, look, this worked exactly the way that futures markets are supposed to work, anything with a futures market tends to stop markets that have parabolic moves on them, right? They were really developed for the most part for commodities, because commodities tended to be, or are, I should say, supply and demand driven markets that can have supply specifically usually massively changed in the event of something like weather or a war or whatever. Like, or something can happen and the supply can change dramatically and the price can go parabolic very quickly. Futures markets can come in and help to tame that. That's one of the reasons why it happened. Then you look at precious metals, and there's like more of a conspiracy about that. If it's true, then you look at history, and then you look at Bitcoin and you say, well, if this is what futures have done for every single one of these markets, they used to be parabolic and now they're no longer. What does it mean for Bitcoin? And I mean, the optimist in me is saying, well, who cares? Like, it'll just keep charging. Like, don't worry, the supply curve's different. It's a different beast. You can't mine it forever. The trader in me looks to the past for patterns and says, well, if this pattern, if futures equals this many times in the past, futures equals this in the present, what do I think the future is going to look like? Well, and I'm not saying that's what I think, but there's two pieces to this. And the most important piece is that you can't let your own bias get in the way of what your research tells you. If you want Bitcoin to go to 300,000 a coin, we all do, obviously, that's great. But you still have to go through the analysis as objectively as you possibly can. And if you can't do that, you need to be able to find people that can do it, that aren't on the other side of the emotional thing, who are uber bears that are like, oh, it's going to zero, you're screwed, there's no growth left, right? You need to be able to digest information and get analysis so that you are not the point of failure, right? You are not putting just self-fulfilling prophecies that are based on false information, based on biased information. That's a really good way to lose all your money, I can promise you. All right, this is just the official, I should say, hearing charter. There's a lot of confusion yesterday. It turns out there was a hearing charter, or at least one appeared today. And they are going to have a hearing. It looks pretty informal. I'll link to this. You can go check it out. I do not think anything is going to come of this anytime soon, but they're going to go and discuss what the deal is with crypto, and maybe not about any sort of security, whether or not the Ethereum's a security, but I think it just is important. This did come out. It is on the government website, U.S. government website. So I'll link to this. You can go check it out. Last thing I want to share with you guys, if you have, I think I mentioned this last week, the Ray Dalio video about the how the economic machine works, 30-minute video about the credit and debt cycles. of the world. Probably the greatest introduction to macro you can get. This is a YouTube series. It's like 8 videos. They're all about 4 or 5 minute long, and all about his new book, Principles, which if you haven't read, you should go check that out. It's a really, really good book. But he talks, it's just a terrific explanation on how he has developed mental systems, mental models to move forward in life. And he talks about some of his deepest failures and how he created ways to get out of that and then go on to be a success. And in his case, he went from being completely broke. He made a public declaration in 1982 that there was going to be a huge depression, and he bet all of his money on it. And he's a pretty, comes from a modest background, but he had built up some money from his jobs and stuff. Bet all his money, went out in public. He's like, we are going into a depression. I'm going short. It's going to be terrible. And then we proceeded to go into the biggest bull run in history of the United States for 18 straight years. And he just got completely destroyed. Fast forward to now, he runs the biggest hedge fund in the world, $162 billion under management. So, good guy to listen to. Really great series. I'll link this up. And I really respect this guy. I think he's helped me make better decisions. So least I can do is share his stuff. With that, we're going to wrap it up there. Always great. Happy Tuesday. Hope you're all doing, having a good day. And we'll see you tomorrow. All right. Peace out.